Welcome to the deep dive. Let's state the obvious. Navigating the fixed income markets in 2025. Well, it hasn't exactly been smooth sailing.
No, definitely not. With all the market turmoil we're seeing, professional portfolio managers are, frankly, facing some real challenges.
They really are. So today, we're going to zero in on a specific technology provider that aims to give those managers some serious tools. We're talking about bondIT.
Exactly. bondIT's focus is squarely on fixed income portfolio management and automation. And what we want to do today is explore their frontier product.
Right, and specifically how its features can help professional managers, not just survive this volatility, but maybe even find opportunities within it.
That's the goal.
Okay, so our mission for this deep dive. Cut through the noise, understand how Frontier automates, and ultimately how it can, elevate fixed income portfolio management and trading, especially now.
Sounds good.
Let's start with bondIT itself. What makes them different? What's their story?
Well, bondIT was quite early in this space, fixed income portfolio management and automation. They were sort of a first mover.
Okay.
And their approach was pretty novel at the time. They focused on directly connecting market liquidity information to the actual holdings in a portfolio.
Ah, okay. So not just a trading venue.
Exactly. It's different. It's about understanding how easily you can actually trade the bonds you hold, not just where they might trade. That's a key differentiator.
Right. More integrated intelligence.
Precisely. And they offer more than just trading connectivity. Think trade ideas, research tools, portfolio solutions, a wider suite.
Makes sense. Now, for the managers using this day in, day out,
Yeah.
what's the actual experience like? Is it user-friendly, clunky?
User experience is definitely a high priority for them. Frontier's interface, it was designed to be intuitive, easy to get around,
Correct.
but also really flexible. It can adapt to specific client needs, different workflows, and that user focus it's paid off. They've seen significant adoption, especially with leading U.S. wealth players. They're really strong there.
That kind of adoption speaks volumes, doesn't it? Suggests it's working well in practice.
It does.
What about the engine under the hood? In these markets, speed and reliability are non-negotiable.
Absolutely critical. bondIT's tech is built for, institutional scale. It can handle millions of market messages per minute. It's robust. It's fast.
Millions per minute, okay.
Yeah, it's high capacity. And importantly, the workflows are tailored. Different user groups, portfolio managers, traders, advisors, they get workflows designed for their specific tasks.
So it adapts to the role.
Right. And it's not static. They work in monthly development sprints, constantly taking client feedback, adding features, refining things. Very responsive.
That iterative approach is important.
Mm.
What about plugging it into everything else a firm uses? The data feeds, the other systems? How smooth is that?
Integration is definitely one of their core strengths. They've got a lot of experience here, established connections to, a whole host of platforms and data providers. And they pull in both evaluated pricing and live real-time pricing. That's crucial for maximizing your view of available inventory, finding the best opportunities.
And execution. Can you trade directly?
Yes, there's click-to-trade functionality right from the platform, and also a bid-wanted feature for sourcing liquidity.
That whole chain, from data to analysis to execution, all integrated. That sounds incredibly efficient, especially when things are moving fast.
It really is. It empowers managers to act quickly and decisively.
And it's clear this wasn't built overnight. There must be significant investment behind it.
Oh, absolutely. They've invested, I think the number is over $60 million in the platform over the last 6 years or so.
Wow.
Yeah, it shows a real commitment. And of course, they meet high standards for data security, privacy. They're SOC2 certified, which is vital.
Okay, that sets the stage nicely. We understand bondIT's background, their philosophy. Now let's really dive into the Frontier product itself. What are the key features, the capabilities that are most relevant right now?
Right. So Frontier is really their flagship platform for managing fixed income workflows in, this digital age. The big focus is that intuitive user experience designed to make portfolio management processes more efficient.
And you mentioned integration before.
Yes. Critically, Frontier has a comprehensive API infrastructure. Think of it like a universal adapter.
Okay.
It lets the platform slot seamlessly into a firm's existing tech stack. You can even pull in your own proprietary data, which is a big plus for many firms.
That avoids those data silos, keeps everything talking. Very important.
Mm-hmm.
But the core function, portfolio construction, optimization, what does Frontier bring to the table there? Fixed income is complex.
It really is. Frontier offers very powerful and scalable optimization capabilities built specifically for fixed income's unique challenges. meaning it considers yield, obviously, but also risk metrics, cash flow patterns, and really importantly, all those individual constraints a manager has to work within.
Okay. And how does that actually work in practice? Is there a specific tool for that?
Yes. A key part is what they call the investment parameter function, or IPS.
IPS.
Think of the IPS function as like a set of customizable rulebooks. It lets you build model portfolios based on very clear, predefined investment guidelines.
All right, let's make this concrete. Walk us through an example. How would a portfolio manager use the IPS?
Sure. Let's say you need to build a model for intermediate investment grade corporates, maybe duration 3 to 8 years.
Okay, common scenario.
Right. So within Frontier's IPS function, you can select that as a preset guideline. The platform then automatically shows you the relevant parameters, things like diversification rules, maybe a 1 to 3% limit per bond.
Got it.
A minimum credit rating, let's say A-, and that duration range we mentioned. And you set your objective, maybe maximize yield within those rules.
A very clear framework. Then what? How does the portfolio actually get built?
Once you've confirmed those parameters are what you want, you basically just initiate the build. You give the model a name, specify the amount, say $10 million, and choose your starting investment universe. You might use something broad like the LQD ETF's constituents as a base.
And then?
You click a button.
Yeah.
And the platform very, very quickly constructs a portfolio that fits all those rules. You get a notification almost instantly when it's done.
That speed sounds critical, especially now.
It is. In this kind of volatile environment, speed isn't just convenience. It lets managers jump on market opportunities, adjust strategies before those chances disappear. It's about being proactive.
Instant portfolio construction based on tight rules. That's powerful.
Yeah.
What do you see once it's built? How do you know if it met the goals?
Right away, the platform shows you the key results. The yield achieved, maybe it's a 5.77%. The effective duration, perhaps 5.4 years. And crucially, it confirms if all your initial investment parameters were met. Often there's like a green check mark or something obvious.
Visual confirmation.
Exactly. And from there, you can drill down. Go into detailed risk and analytics pages, get a really granular view, or just see the full list of the bonds the system selected.
So you go from a broad idea to a fully built, analyzed portfolio in moments. That's impressive. What if you need to be more selective before you even build? Maybe focus on a very specific niche.
That's where the custom universe creation tool is really useful. It lets you filter down from potentially millions of securities to just the ones that match your specific criteria.
How specific can you get?
Very specific. You can start broad, or maybe pick an existing index or a list of ESG-screened bonds or your firm's compliance-approved list.
Right.
Then you filter by all the standard bond characteristics, currency, sector, maturity, price, duration, rating, you name it.
And custom factors, like internal scores.
Yes, that's important too. You can filter on custom fields, like your firm's own liquidity score or a relative value measure you've calculated.
Give me an example.
Okay, maybe you only want U.S. dollar financials, maturity less than 10 years, and investment grade. You set those filters.
Simple enough.
Define the criteria, run the search, and boom, there's your focus universe. And you can save these custom universes, reuse them again and again in different workflows, building models, running optimizations, whatever you need.
Being able to create and save those targeted lists.
Yeah.
Yeah, I can see how valuable that is for quickly zooming in on market segments, especially when things are choppy.
Definitely.
Now, let's switch to managing portfolios that already exist, rebalancing. Given how fast things are moving, how does Frontier help there?
Frontier has real-time portfolio rebalancing, and it's driven by that same powerful optimization engine we talked about.
Real time. Okay.
When you start a rebalance, the system looks at key inputs. You provide things like the maximum number of trades you're willing to make or any new cash coming in or going out.
So it respects practical constraints. It's not just optimizing in a vacuum.
Exactly. There's control. Let's walk through a scenario. Maybe you've talked to a client, and given the market, you both decide you need to dial back the interest rate risk.
Right. Shorten duration.
Precisely. So within Frontier, you'd go to the rebalance function. The current portfolio's details are already there. You just adjust the target duration, maybe shorten it by a year, keep other goals the same.
And
the optimization engine gets to work, again, in real time. It figures out the trades needed to hit that new, shorter duration target while staying within your transaction limits and other rules.
what does the manager see then before pulling the trigger on the trades?
You get a really clear comparison, side by side,
Okay.
Original portfolio versus the proposed rebalanced one. It highlights the changes, duration, VAR, yield, everything.
So you can clearly show the client the impact.
Exactly. It makes that conversation much more transparent. Here's where we are, here's the proposed change, here's why, and here's the expected outcome. You can also see the exact list of buys and sells needed. Check it against your trade limits.
That transparency and control must be vital for client confidence, especially when markets are stressed.
Absolutely.
Now, what if? What if the system just can't meet all the goals? Maybe the market's too tight or the constraints are too conflicting.
That's where a very practical feature called Solve Anyway comes in.
Solve anyway.
Yeah. If Frontier determines it's actually impossible to hit all the targets simultaneously, it won't just fail. It will generate the closest possible portfolio it can find.
Okay.
And it will clearly tell you which constraints had to be relaxed to get there.
That sounds incredibly useful in the real world.
It really is. Because sometimes, especially in messy markets, achieving every single goal just isn't feasible. Solve Anyway gives you the best achievable outcome. But, crucially, it also shows you where the friction is. It highlights the trade-offs the market is forcing on you.
So it's realistic.
Yeah.
It provides the best path forward, even if it's not the perfect theoretical path.
Precisely. It helps inform those necessary compromises.
Got it. And one last thing on features, we've covered a lot of power here. How much can firms tailor the actual interface, the look and feel, to their own way of working?
It's highly customizable. bondIT knows that different firms work differently, have different data they prioritize, different steps in their process.
Right.
So Frontier can be configured to match those specific workflows. From the starting universe of bonds they typically use, to their unique optimization goals, even down to very specific bond-level rules, the customization goes pretty deep.
So definitely not a one-size-fits-all box. It sounds like it's designed to be flexible, powerful, really a tool for professional managers dealing with today's complexities.
That's the idea.
Okay, let's shift focus slightly. We've talked about the features. Now let's connect them directly to the situation in 2025, this market turmoil. Where does Frontier's automation and capability really shine? Give us some concrete use cases.
Well, think about that IPS functionality we discussed. In this kind of volatile market, being able to quickly spin up model portfolios that hit very specific risk-return targets, that's huge.
Because conditions change fast.
Exactly. That speed lets managers react, adjust strategies, maybe capture fleeting opportunities before they're gone. And the custom universe tool, same idea.
How so?
It lets you quickly narrow your focus. Maybe you want to isolate higher quality bonds right now, or shorter duration paper to cut interest rate risk. That tool lets you slice and dice the market to find those pockets of relative safety or value amidst the turmoil.
Makes perfect sense. Rapidly adjusting focus, building targeted portfolios.
Yeah.
That feels like a real edge right now.
Yeah.
What about managing the portfolios you already hold?
That real-time rebalancing becomes absolutely critical. Markets shift fast. You need to be able to adjust just as fast.
Adjusting duration, credit quality.
Sector allocations, whatever needs changing to manage risk as conditions evolve. Frontier lets you do that quickly and efficiently. Plus, the analytics keep you constantly informed. Continuous monitoring of risk and return, you need that real-time feedback loop when things are choppy.
And client interactions.
Big benefit there, too. When clients are nervous or you need to propose a shift in strategy, being able to generate tailored, data-backed proposals quickly, that really helps manage those conversations effectively.
So it's about being proactive, responsive, data-driven, rather than just reacting after the fact.
Precisely. And think about the operational side. Turmoil often means higher trading volumes, more client calls.
Right, more workload.
Frontier's efficiency helps manage that surge. It frees up the manager's time to focus on the crucial strategic thinking, not just getting bogged down in process. And that Solve Anyway feature we mentioned, super relevant now, because achieving all your goals in a volatile market might be tough. Knowing the platform can still give you the best possible viable portfolio under stress, that's reassuring.
Okay, so lots of practical applications in this environment. Okay, to wrap this up then, for the professional fixed income portfolio managers listening, facing these 2025 market conditions, what are the main takeaways about bondIT's Frontier product?
I'd say the core benefits really boil down to 1, much greater efficiency in building and rebalancing portfolios. 2, the power to do highly customized, targeted market analysis. And 3, ultimately more streamlined, effective workflows overall.
And in this market,
Frontier gives you tools to be more agile, make data-driven decisions faster and with more confidence, and critically, manage portfolio risk more effectively. bondIT's whole goal is providing tech that drives better performance and better operational efficiency in fixed income.
It certainly sounds like a compelling and very timely solution for these conditions.
Yeah.
If someone listening wants to learn more, maybe see Frontier in action, what's the best next step?
The best thing is probably to reach out to bondIT directly. Schedule a demo, talk about your specific situation, your challenges. They can give you a much more tailored view of how Frontier might fit your firm's specific needs.